Technology giant Apple Inc. has become the first US company to cross a stock market value of $2 trillion and has become the most valued company in the world. Let's do a three-point analysis to find out why is this a big deal. 1. Not even some countries' GDP is $2 trillion. Yes, you heard it right. Apple Inc.'s value is more than the GDP of countries including Brazil, Russia, South Korea, Spain, Mexico, Canada, and even a continent, Australia. These countries have a GDP of over $1 trillion each. Now, countries with more than $2 trillion of GDP include the likes of the US, European Union, China, Japan, Germany, and India. Now, Apple is followed by companies like Amazon.com and Microsoft in the second and third places with market caps below $1.7 trillion. In fact, Apple now accounts for close to 7% of the total stock market value of S&P 500. Now, before Apple Inc., Saudi Arabia's oil company Saudi Aramco had also reached the $2 trillion mark in December 2019. But the subsequent global economic slowdown and the plunge in oil prices caused the stock to tumble. 2. What has really led to Apple's huge valuation despite the COVID-19-led disruptions? Well, the company's exponential rise comes at a time when the US technology stocks have actually witnessed a sharp rally. Apple's stock has surged by almost 57% this year. In addition, the strong forecast beating earnings despite the COVID-19 pandemic and the optimism over the forthcoming 5G iPhone have all aided the rally this time. Now, iPhone maker had reported revenue gains across categories and geographies, and consumers working and learning from home during the COVID-19 pandemic also turned to its products and services during the lockdowns. Now, the fresh rally in Apple stocks despite the economic slowdown is a sign of growing investor confidence in the company. Now, Apple seems to be diversifying further and focusing more on services for users like videos, music, and games. 3. How should Indian investors view this then? Well, for an individual investor in India, 15 to 30% of their portfolio could be international. And experts say that said, the exposure can also be built up over some time, given the risk appetite. Now, even within the international basket, experts say one should diversify between sectors and companies. Siddharth Panchwani, Chief Strategy Officer, Pick-Right Technologies, has told Moneycontrol that when a single company, that is Apple, is valued equal to the market capitalization of the whole country, it is easy to say that Indian companies are still some distance away from commanding these kind of valuations. Now, it is difficult to come across Indian companies which actually create truly global must-have consumer products and services with fat margins and metrics which are needed for a $2 trillion kind of a valuation. Now, at some point in the future, as a whole country rises in stature, it might be possible, but at least in the short term, we find that the experts say that Indian behemoths are positioned to service primarily just the domestic demographic as opposed to a global population right now. Now, Siddharth also says that this will limit valuations given the price sensitivity and lower margins in the Indian market.